Nigeria's Debt Management Office says the country remains committed and will also meet all its demand obligations in terms of debt. This comes as the DMO says Nigeria's Finance Minister's comment was taken out of context in a recent interview. Adamma Mbachu, team leader, currency trading at Access Bank, joins me now for the weekly market update. Thank you so much for joining us on the show today. Good to see you, Adamma.
Thank you, David.
Now, starting off the conversation, let's start really now with the big elephant in the room. We had talks or whispers around debt restructuring and then the clarification from the Debt Management Office. Let's see how this is affecting the market sentiment today.
When the pronouncement came from the minister, we saw a lot of reactions in the fixed income market. We saw sell down at the Eurobond space. We have people coming in to take up opportunities as they saw the yields quite rising. It was a bit of stir. However, when we got more clarifications on the debt restructuring process, the market actually calmed down a bit. The fixed income market has been experiencing a bit of turbulence in the market. We saw the yields actually inching up across all the standard maturities, and we saw investors actually being on the sidelines to see if they can take up higher yield on the positions that they have. So that also actually affected the treasury bills market, given that we saw a bit of liquidity squeeze within the week, which we have been experiencing, low liquidity, which affected actually the treasury bills auction that played out this week, where a total of 191 billion that was offered. However, the DMO sold about 35 billion across all the standard maturities. And we saw a slight inch up across the 181D and going from 7.5 to 7.9, while the 364D went as high as by over 100 basis points from 12% to 13%.
Adamma, we're also expecting the CBN to also have the retail auction done today for the SMIs, talking about that. Let's talk about how this would also excite the market, whether that's enough.
Oh yes, they have just sent out the notifications across all banks, and the banks are actually preparing for the auction. However, it's actually going to play out for banks that have adequate liquidity to go for the auction. Like I said, the liquidity is actually a bit of a problem in the market right now. The market actually opened with about 364 billion deficit and actually graduated into higher. We saw rates in the market inch up to about 16% to 16.5%.
Sure.
However, I think the banks actually will do a lot to see if they can rake in liquidity to see if they can qualify for the auction. So we're actually preparing for the retail auction right now.
Keeping our fingers crossed. Now, we're also seeing some interest within the 2029 and 2037 papers now, and investors are looking towards Monday's bond auction as well. Let's talk about the sentiments that would also see pull out as we are making forecasts for the next week.
Oh yes, on Monday there will be a bond auction where about 225 billion will be offered across the maturities, the 32, 37 and the 29. And then we expect that the rates will actually come out higher from the last auction. Players are actually predicting about 100 basis points, 50 to 100 basis point movement in that space.